what we need to see is how do we translate this management by objectives into actual practice. We need to agree on a performance measure for which every individual is held responsible, right? By which every individual will be measured. Now, this performance measure is called CSF, the critical success factor. Now, the critical success factor depends on how or what the impact of the performance of the department, which in turn will impact corporate strategy, right? The critical success factor, in other words, helps to translate strategic objectives at the organizational level into performance targets at the individual level, right? Let's look at an example to understand this concept of critical success factor. Let's take a company like Diamond Chains. Diamond Chain is a company in the Murugappa Group, the Chennai-based Murugappa Group of companies, which has many companies in the group like Carborundum Universal, and it has a large number of companies in a variety of fields. Now, Diamond Chain is one of these companies, which is a subsidiary of a company called Tube Investments. Tube Investments is a company which manufactures tubes for various applications. One of its subsidiaries is this company, Diamond Chain, which makes chains for the motorcycle industry. Now, we must look at what is the corporate objective which came in as a part of corporate strategy as far as this particular product is concerned. Now, the corporate objective is that Diamond Chains must focus on market penetration. So, the strategic objective is market penetration. You will recall that we had looked at one of the earlier sessions at the Ansoff matrix, which gave us 4 different methods of growth. Market penetration is one of those methods. What does it involve? It means we confine ourselves, the company confines itself to a particular market, the present market it's operating in, and that the company confines itself to the present set of products that it is manufacturing. Now, today, Diamond Chains, a large part of its market is the Tamil Nadu market. So, Diamond Chains continues to focus on Tamil Nadu, and Diamond Chains continues to manufacture these roller chains for the motorcycle industry. That's what market penetration means. But then, how do you penetrate the market? How do you increase your revenue? How do you increase your margins, right? For this, we need to convert this strategic objective into sub-objectives, which are the critical success factors, okay? For instance, this particular market objective, this particular strategic objective of market penetration, one way of achieving market penetration is by looking at increasing the contribution within that particular market segment which we are focusing on. Now, Diamond Chains is focusing on Tamil Nadu. Tamil Nadu has several regions, several sub-regions. There are some of these sub-regions where Diamond Chain is not very strong. So, one way of increasing market penetration is by increasing contribution in those regions where the company today is relatively weak. So, increased contribution by region, that's one way in which market penetration can be broken down into a critical success factor. Okay, now let's look at how the roller chain, how this roller chain for the motorcycle sector, how is this chain sold in the market? It's sold through a large number of small shops who repair motorcycles. So, access to these small shops across the state is what gives rise to the sales of these motor chains. Another critical success factor could therefore be the number of new accounts. In other words, today if 30% of these repair shops across Tamil Nadu use diamond chain, roller chains, then the company's objective could be to increase that 30% to 40% by the end of the next year, right? So, increasing the number of new accounts could be one critical success factor which follows from the strategic objective of market penetration. Now, it's not merely the revenue that is important. Market penetration means that the margin that revenue generates must also increase. Therefore, another critical success factor could be to increase margin as a percentage of sales. Now, how would one do this? Margin could go up as a percentage of sales either by reducing the cost of selling or by increasing the price at which the product is being sold. Right? Now, the individual in the marketing department could look at his own methods to achieve this objective, this critical success factor of increasing margin as a percentage of sales. What we need to see is that achieving these critical success factors in turn helps achievement of the strategic objective of market penetration. Let's see what the gentleman who spoke earlier on strategy implementation, let's see what he has to say about this issue.
Next, we've got to have performance measures to back up those objectives. Performance measures cascade throughout the organizations to achieve this alignment. In other words, they should be set for strategy accomplishment at the corporate, business, and functional levels. Roles and responsibilities and corporate policies and procedures need to be aligned with the strategy. This all sounds well and good, but realize that the research has shown that 92% of companies don't measure or monitor their key performance indicators.